Our next question for the evening is, now that the dollar has lost value, does that mean I should stop sitting on my cash and invest it in or out of the stock market? Lee, what do you think about this one?
Yeah, this is one seems to come up every now and again, and it's always due to something that's slightly different. I remember this question when inflation started being a pretty big topic of discussion, I guess I could say. And by no means is it gone, but people always want to optimize when their money's working for them, and maybe when it's a better time for it not to be working for them. And quite bluntly, that's what our AI is doing in the stock market for you. When it's statistically in your best interest to be invested, then it wants that money working for you. The opposite's obviously also true as well. When it senses danger, or if it just doesn't see much reward in the near future that's not worth taking on a bunch of risk for, then we're going to sit in cash. So in my mind, it kind of comes down to, like, yes, I'd always like my money to be working for me, but at the same time, regardless of the buying power of the dollar fluctuating and sometimes being better in the foreign exchange markets than others compared to other currencies, would you rather just lose buying power towards something like inflation, or towards, say the pound or the euro or something like that? Or would you also, on top of that, like to lose money in the market? And that's obviously a loaded question. No one wants to lose money in the market. So I don't think it applies as much to what we're doing now. If you were managing things on your own, that's definitely something you'd like to consider. But the point remains the same. What's going on in the foreign exchange markets, it is relevant, but it's not as relevant to should my money be working for me or not. That's what the AI does for us.
Yeah, I gotta be honest here. This question, I had to read it a couple of times to make sure that I was understanding it. So let's just go back to this question real quick. Now that the dollar has lost value, does that mean I should invest it? I kind of the reason I had a tough time with this is that if your dollar has lost buying power, then why would you want to use it? Would you know what I mean? Like, because like you said, Lee, we got this question a lot when the dollar was skyrocketing. The buying power of the dollar was skyrocketing, like last year and stuff. And it was like, oh my God, should we invest? And I think one of the questions that this reminded me of was, at the time, it was like, should I invest in like international real estate? Which that made sense to me, because comparatively, this is the way that the currency market works, everybody, is you have to compare two different currencies, right? This is exactly the way that crypto works as well, if you didn't already know. There's, if you look, if Forex 101, there's always two currencies. So it's like USD, CAD, right, for the Canadian dollar, or GBP for the British pound, USD, right, for comparing the dollar to the British pound. There's always, that's why we call them pairs. There's always two currencies. So this is very much an international question, right? It's the US dollar buying power versus another country's buying power. So when the buying power of the dollar is very strong compared to, let's say, the euro, then it makes sense that you might want to use that dollar at that moment in time to buy like a property or something. But when your dollar is weakened, then it then you'd be getting less of a deal if you were to buy something. So this question was a little bit puzzling to me, the way that it was phrased. I think if we take a step back, I think the mindset behind this question was, something is happening. Should I act on it? And the simplest answer to that is, number one, we can't give advice, so we can't say you should or shouldn't do anything. But let's just go back to the, like, kind of like a math, like training exercise almost. Like, if you have um, if you have increased buying power, that means that you get a better deal on whatever it is that you're buying. But understand what you're buying against, like what you're buying against another country's currency. if you think about it, there's another fun way to remember this is during our previous presidential administration, the dollar was as weak as it has ever been. And and our president loved it, right? Trump at the time loved that. He was ecstatic about it. Why would you want a weakened dollar as a country? Because it promotes, think of it from the other side of things. Every other country is now their buying power has increased, and they're like, oh wow, we're going to get a better deal on American products like iPhones and whatever, right? We're going to get a better deal on American stuff. And that promotes American business, which is what he wanted all along. So maybe that's a way that you can remember the significance of currencies getting stronger and weaker. It is very much an international transaction question. If you're the other way to remember it is Kelly last week was like, he was kind of bummed out that the dollar is weakened because he's going to Europe soon, and he wanted the best deal possible for wherever he was going to go. I think he's going to eat in France and stuff like that. So so that's the way that it works. So hopefully that helps clarify the nature of buying power when it comes to international currencies.